Hello everyone. Welcome back to Accountants Minds. In our previous lesson, we learned how to record business transactions using journal entries. But after recording transactions in the journal, what happens next? The next step is to transfer those transactions to the ledger. In today's lesson, we'll learn what a ledger is, how it works, and how to post journal entries into ledger accounts. So, let's get started. A ledger is a book or record where all transactions relating to a particular account are recorded after they are entered in the journal. In simple words, the journal records transactions one by one, while the ledger groups transactions according to each account. Let's look at the key points. A ledger is called the book of final entry because transactions are classified into individual accounts after they are first recorded in the journal. Each account has its own ledger account. For example, cash has its own ledger, furniture has its own ledger, and capital has its own ledger. This makes it easy to know the balance of each account. Always remember this accounting process. Transaction journal ledger trial balance financial statements. Every accounting system follows this sequence. Now that we know what a ledger is, let's look at the format used to record transactions in the ledger. The most common way to represent a ledger account is by using a T account. It is called a T account because it looks like the letter T. The left side is called the debit side, and the right side is called the credit side. Posting from the journal to the ledger is actually very easy. If an account is debited in the journal, it will also be posted on the debit side of its ledger account. If an account is credited in the journal, it will also be posted on the credit side of its ledger account. Notice that the amount does not change when posting. Only make sure that you use the correct account and post it on the correct side. Now let's learn the simple steps that you should follow every time you post a journal entry into the ledger. Many students think posting is difficult, but if you follow these 5 steps, it becomes very simple. First, read the journal entry carefully. Understand what happened in the transaction. Second, identify all the accounts involved. For example, if the journal entry contains cash and capital, then those are the 2 ledger accounts we need. Third, open a separate ledger account for each affected account. Every account has its own ledger. Fourth, post each account to the correct side. Debit stays on the debit side. Credit stays on the credit side. Finally, write the opposite account name in the particulars column. This helps us identify which account the transaction relates to. Here's an easy memory trick. Journal debit, ledger debit. Journal credit, ledger credit. If you remember this rule, posting becomes much easier. Also remember, the amount remains the same. Every journal entry affects at least 2 ledger accounts. The ledger helps us determine the balance of each account. Now let's apply these steps using a practical example. Suppose the owner starts the business with £100,000 cash. The journal entry is debit cash account £100,000, credit capital account £100,000. Let's post this to the cash account first. Cash is debited in the journal. Therefore, we record it on the debit side of the cash ledger. In the particulars column, we write capital because that is the opposite account. Next, we post the capital account. Capital is credited in the journal. Therefore, we record it on the credit side of the capital ledger. In the particulars column, we write cash. Notice something important. One journal entry created entries in 2 different ledger accounts. This is how every transaction is classified in accounting. Great! Now let's quickly summarize everything we learned today. Today we learned what a ledger is and why it is important in accounting. We also learned the T account format and the rules for posting journal entries into the ledger. Then we followed the 5 simple posting steps and applied them using a practical example. When posting to the ledger, avoid these common mistakes. Don't post on the wrong side. Don't forget one of the accounts. Always write the correct opposite account in the particulars column. And always check the amount before posting. Remember this simple accounting flow. Transaction journal ledger trial balance financial statements. If you understand this flow, the accounting cycle becomes much easier. Thank you for watching today's lesson. If you found this video helpful, please like, share, and subscribe to Accountants Minds. In the next lesson, we'll learn how to balance ledger accounts and understand the meaning of balance CD and balance B a D. Thank you, keep learning, and I'll see you in the next lesson.